Hi everybody, Alex Deployer from Expert Forex, and in this short video I want to introduce you to the concept of bull and bear charts. Now, very early in our career we realized that turning points in the market happen on a different basis, whether the price is moving up or whether it's moving down. Now, when the price is moving up, the lows of the candles are more important to identify turning points. And when it's moving down, the highs of the candles are more important to determine turning points. So what we did is we created our own charts. We created line charts that are based on the low of a candle, and we created bear charts based on the highs of the candle, and we would only take sells based on bear charts, and we would only take buys based on bull charts. Now, why did you do that, I hear you ask? Now, I'm going to show you exactly how this works, how we set the charts up, and this is how it gets traded. And by the way, this is a millionaire secret. It gives you a huge advantage in the market. Huge. All right, so how do you set a bull chart up? Bull chart is, remember, using the lows of the candles to make decisions to trade upwards, and the bear charts are making the highs of the candles to trade downwards. Okay, so what we do is we do a moving average, and I'm using the moving average of 4, and it's based on the low of the candle, the simple low of the candle. So this chart has a moving average based on the low of the candles. So these are hourly charts, but you can apply it to any chart you wish. And these ones are also 4 MAs, but they are applied to the high of the candles. So what we do is we trade trend line violations, and trend line violations, as you know, are the best ways of catching long candles. And what is a long candle? A long candle is a very fast move in the direction that you want it to go, and that's a very good way of doing double in a day trades and things like that. So if you want to catch long candles, use trend line violation. This principle is discussed in detail in a very old trading course written by Barry Thornton called the Long Candle Course. He shows you how to catch long candles in this particular course. Anyway, so now we have 2 charts here. We have one based on the lows and one based on the highs. And as I say, we trade trend line violations. You can do this with lots of things. Even indicators allow you to set the indicator on a high and the indicator on a low. And what we used to do is you only took sell signals from the high based indicators, and we only took buy signals from the low, the indicators based on the lows. And let's just show you what the advantage is. Okay, so here's a trend line violation. Let me just tidy it up a little bit. So how trend line violation works is you just draw a trend line over the turning points in the market, and when the price violates that turning point, you can then trade. You can either trade immediately when it violates, or you can wait for the close of the candle. In this case, I've waited for the close of the candle, but you can trade immediately. So what you would then do is you'd go boom, boom, and you trade, and there's the close of the candle, and you'd be entering a sell at 7207. Now, if you used the bear charts to do your selling, now that's what you should be doing, is you draw the same trend line over the new chart line that we've created, and there is the violation of that trend line, and the close is right there. So at what price can you now get in? So now, instead of getting in at 7207, we're getting at 7233. Now, same trade, but you have made a 28 pip advantage on this particular trade, and you have caught the long. There's the long candle. You've caught the long candle, whereas this one didn't catch the long candle. So can you see the advantage and why we did this? It gave us a huge advantage in the market. Bear charts and bull charts are easy to construct. I have told you how to do that, and you trade the You only trade sells on the bear charts and buys on the bull charts. Now, to give you a similar example, here's a buy transaction, and you would not use the bear charts to do buy transactions. Why not? Because look, here's the trend line, there's the violation, there's the close, and you would be buying at 45. But because you're using the bull charts, your trend line violation happens a lot earlier. There's the close of the candle, and you're getting in at 80.32. So another 13 pip advantage. Now, if you do this on all your trades, those 13 pip advantages and 20 pip advantages build up to huge numbers over, let's say, 30 or 50 trades. So that's the way we traded, and we basically paid all the spreads and things like that because we had this huge advantage over the market. Now, as I said, this was an introduction, and I hope you found this trading concept interesting. You'll most probably not see it anywhere at all. It is a millionaire secret, and hopefully you can take advantage of it. So from me, Alex Deploy, cheerio.
Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Deploy, cheerio.